Despite having cooled off a bit, the GDXJ is overheated with assets jumping 60% to over $5 billion this year. So has it become too big to succeed? And what could this mean for the miners? Joining us now is U.S. Global Investors CEO Frank Holmes. Frank, this sector obviously getting a boost this year. Investors poured in some $1.5 billion into the GDXJ this year alone. So what's your take on the matter?
Well, the formation of capital is very morphed only for ETFs. And last year, $5 billion went into the GDXJ. And normally that would go to active gold fund managers like ourselves and Tocqueville's. And however, it's not happening to the degree that it ever happened before, even though we outperform it, because people want to have just cheap index product. And so what's happened there is that you get this massive amount of capital going into the GDXJ, and then the GDXJ says, oh, we're going to change, and we're going to predominantly have big cap gold stocks because we're owning too much of the small cap gold stocks, and great small cap gold stocks get spanked for no reason when they've got great fundamentals. So you're seeing them down for this past week. Small cap gold stocks are down, big cap gold stocks are up. So that's the disruption.
So Frank, what's the solution here? You know, in an attempt to manage the huge inflows, Van Eck widened the scope of the ETF by including major miners, for example. Do you think this is the right thing to do?
No, I think that you're no longer getting a direct play on gold stocks. It's getting morphed. And I think that people really should consider, if they're putting to a fund manager, that they should be looking at an active gold fund manager, because they're able to sift and sort better gold stocks versus the worst ones, not just on their market cap. But the opportunity is for you. Here's the opportunity. Klondex gets knocked down dramatically, and so does Wesdome. Two great gold mining companies, and Wesdome has very high grade and has had huge exploration success, so their opportunities for growth are spectacular. And them being sold off, well, if the active fund manager had more money, they'd be buying this as opportunity. So for individual investors, I think it's very attractive. We own both.
All right, let's talk gold prices now. Gold still unable to climb back up to the earlier week highs, but all eyes now are on the first round of French elections this weekend. So what could this mean for the metal here, Frank?
Just more volatility. You have extremism in France. You have the extreme right and the extreme left. You got extreme leftists that wants an income tax of 100%, basically putting the French society back to serfdom. And so it's amazing to watch. All that does is create volatility. I think more important is that in the past week, the 10-year government bond in the U.S. has come off 10%, the yield. So it's 2.21. It's below the inflationary rate. So therefore, you're getting negative. CPI is higher. So therefore, you're getting negative real interest rates. That's what's really positive and constructive for gold.
All right. And last and final thoughts, Frank, as we head into next week, what should we be eyeing? What's your touchdown pass going to be?
Usually, you know, I talk about this PMI was out this today, and global PMI still remains robust and strong since last summer. So that's positive for global economic growth. Japan's numbers were fantastic on exports this week. China remains robust. So I think these are really positive. So next week's going to be sentiment. Michigan's sentiment numbers are coming out, and wages. And so that would sort of drive the short-term sentiment in interest rates.
Frank Holmes, U.S. Global Investors, thanks so much for joining us. And thanks for watching this edition of Kitco's Gold Report. We'll see you next week.